1 Bitcoin or 32 Ethereum? Which will make you richer in the future? Which is the best long-term HODL? Those are very important questions, especially as we near the bottom of this bear market, because there might not be a better chance ever to accumulate at these levels. Well, with this episode, I'm going to be as level as possible with my decision, because it's time for chicocrypto. 1 Bitcoin. By having a whole Bitcoin, you own one of 21 million of an asset whose supply can never increase. Bitcoin is the first truly scarce asset to ever hit our world. And by owning one, you get to join a special club, the 21 million club, as there could only be 21 million people ever who could own a full Bitcoin. Checking out this chart of average Bitcoin holdings per user, we can see as of 2020, just 0.2 of a BTC was the average holding. But by 2030, this number rapidly decreases to just 0.02 of a BTC. In just 8 short years, the average holding of a Bitcoin investor will be just 2% of a Bitcoin. And this is because the price should be way higher. And that is just what investors can afford, just 2% of the asset. Which means having 1 Bitcoin will put you in the elite club of the rich if Bitcoin fulfills its destiny as the world's first global monetary network. Now, according to the most recent data, there were about 56.1 million millionaires in the world. That means that every millionaire couldn't even own a full BTC. Shoot, as we can see from the article, the United States alone has over 21 million millionaires. Every US millionaire couldn't own a full BTC even if they wanted to. I've been saying this since I started my channel. This alone could push the price of Bitcoin eventually up to the $1 million mark. Having a full Bitcoin in the future will be seen as a power symbol, like having that big old mansion or that $1 million supercar. Now, what about Ethereum? Well, Ethereum is unlike Bitcoin in that the supply isn't capped. As of right now, there is over 120 million Ether. So by having one, you join the 120 million club. But what about owning 32? Well, if you own 32 ETH, you join the 3.75 million club. As with the current supply, there are only 3.75 million people who could ever own that amount. So having 32 Ethereum is actually scarcer right now than having a full Bitcoin. But what's the average HODL of a Bitcoin from people out there? Well, based on the number of active addresses, which is over 202 million, divided by the ETH supply, which is over 120 million, we can come to the conclusion the average holding of ETH per address is 0.60 of an ETH. Now, this is pretty astonishing, as back in 2018, we can see from this article from Consensus, the average holding per address was 2.17 Ether. So we can assume by 2030, this number will be far lower. I wouldn't doubt it's just 0.1 or less. Ethereum's scarcity is apparent, even with the supply, which is over 5.7 times higher than Bitcoin's final supply. But now let's talk about the most important thing, the current cost to own 1 Bitcoin or 32 ETH. Looking at the price of Bitcoin to obtain a full one, you would need over $23,000. Looking at Ethereum's price, it's just over $1,700 for one. So that number multiplied by 32 is nearly $55,000. It's more expensive to purchase 32 ETH than it is to buy a full Bitcoin. It's over twice as expensive, but this wasn't always the case. As we can see from this chart, at the beginning of 2020, the 32 ETH to 1 Bitcoin ratio was around 0.50, which meant 32 ETH was half as expensive as 1 BTC. But since then, 32 Ethereum has jumped above 2 to 1 and is staying there. And guess who called getting Ethereum when the ratio was 1 to 1? Your boy Chico did, in a similar video posted in October of 2020. After my comparison breakdown, I came to this conclusion. But if you're gonna force me to make a decision, it all comes down to this. Staking. Yep, back then I picked 32 ETH as they were planning to roll out staking on the network, which as we know is now live, with the full deployment of it being just around the corner. So do I still think like this? Is 32 Ethereum the better HODL than 1 Bitcoin? Well, Ethereum staking is here now, and for holding 32 ETH, you can become an ETH2 validator, securing the chain. Checking out data on current staking rewards, we can see if you run your own validator, the average earning is just above 4.5% APR. Now, Bitcoin is proof of work, so there is no way to stake your Bitcoin and earn rewards. By holding Bitcoin on Bitcoin's chain, you are just hoping the price increases. There are no chain rewards unless you own a Bitcoin miner, and that is the way it's going to stay. Ethereum has mining as of right now, but by next month with the mainnet merge, the miners of Ethereum will be the staking validators. Next month, miners will be getting ETH2 block rewards like they have been receiving, but also they get a big old freaking bonus, the Ethereum transaction fees. Checking out crypto fees, we can see that Ethereum transaction fees over the past 7 days have averaged just about $2.7 million. Every single cent of those fees will be distributed to the Ethereum stakers, boosting their rewards. That means the APR is going to jump, but by how much? Well, a Sam on Twitter calculated it using early August data, and they came to the conclusion that staking rewards will jump to nearly 5.9% post-merge. Although this will get even higher when the markets return bullish. Remember, his APR calculation is using transaction fees of around just $2.7 million. This is low as we are in the depths of a bear market. Looking at crypto fees during the hype of last year, in November to be exact, we can see average fees over 7 days was over $72 million. With those types of fees, we could expect APRs for staking to be somewhere between 10 to 20% if all things stay the same. So, passive rewards that will only increase for holding ETH, while Bitcoin just has the hope of increasing in price. But what about ecosystem development? Well, as we know, Ethereum has DeFi on lock. Going to DeFi Llama, we can see Ethereum has over 58% of DeFi on its chain, with total value locked up equaling $40 billion. And the next biggest chain is Tron, which has only $5.88 billion. To find Bitcoin's DeFi, we have to scroll way down to position number 27. Bitcoin only has 124.7 million locked up in its DeFi ecosystem. Why is this? Well, Ethereum has stolen DeFi from Bitcoin with wrapped versions of the asset. There's wrapped Bitcoin, which as we can see has a circulating supply of over 236,000 coins. That means 236,000 Bitcoin have left the Bitcoin ecosystem to come over to Ethereum DeFi, so they can earn passive income on the asset through Ethereum DeFi borrowing, lending, and more. And this isn't the only wrapped version of Bitcoin on Ethereum. CoinGecko has a tokenized Bitcoin page. And as we can see, there's Huobi, HBTC, RenBTC, SBTC, TBDC, and more. But what about institutional adoption? Who takes the cake there? Well, there is no doubt it's Bitcoin. Buy Bitcoin Worldwide has a great webpage which shows the institutions and public companies that have Bitcoin on their balance sheet. It's a long list, plus they have countries that have Bitcoin in their treasuries, as well as private companies and the Bitcoin ETFs. Ethereum cannot compete with this, but things are starting to change in Ethereum's direction. In February of this year, it was announced that the accounting giant KPMG was going to add crypto assets to its balance sheet. And one of them was Bitcoin, but the other was Ethereum. And I have a feeling this tide will only continue as Ethereum is getting its regulatory clarity along with Bitcoin. Just last week, a Senate bill was introduced, and it will consider only 2 assets as commodities of which the CFTC will regulate, and that would be Bitcoin and Ethereum. Having Ether lawfully in the commodity basket along with Bitcoin would bring waves of new institutional adoption. So what's my decision? Well, if you couldn't tell from the tone of the video, I still think 32 Ethereum is the better long-term HODL than 1 Bitcoin, even if the price is twice as high. Cheers, viewers. I'll see you next time.